Hello, class. So, last meeting we talked about gross income, the concept of gross income, what are included as part of gross income, and what are excluded from gross income. We were also able to discuss your allowable deductions, and we explained what's the difference between itemized deductions and optional standard deduction. So to translate those learnings into the actual scenario wherein we file an income tax return for a particular taxpayer. So for purposes of example, I just chose BAR form number 1702. This is for corporation, partnership, and other non-individual taxpayer, but this is only subject to regular income tax rate. So when we say regular income tax rate, that's the usual income tax rate for these type of taxpayers, okay? Because there are other special income tax rates for specified corporations, which we will discuss later. So the main point is um, for us to recall our learnings, what we have learned in gross income, exclusions from gross income, and allowable deductions, and to see them in the BAR tax form. So the first part of the BAR tax form, 1702, is our details. Okay, so we will not dwell into that for now. We will have a separate meeting where we discuss all other items here in the tax return. What we will focus for now, since we are trying to relate this in our discussion on gross income, exclusions from gross income, and allowable deductions, is our part. If you scroll down, is part 4, okay? So computation of tax. So we all know that we have to start with the income portion, just like in our usual income statement under the accounting perspective. We always start with the revenues. So same goes here. Okay, in item number 27, you can see sales, receipts, revenues, or fees. So this represents your gross revenues, right? And if you have sales returns, allowances, and discounts, you have to deduct that from your gross sales. Sales returns, I'm sure you have a good understanding of what sales returns are, allowances and discounts, so I will not discuss it here. So if you deduct these returns, allowances, and discounts from the gross sales, you will get your net sales or net receipts, net revenues, or net fees. Then what comes after is your cost of sales or cost of services. So if your business is all about selling products, you will have your cost of sales, or normally we refer to this under accounting as cost of goods sold. However, if you do not sell goods, but rather you are into the provision of services, we refer to your cost as cost of services rather than cost of sales. Okay, so that's cost of services. So after you deduct cost of sales or cost of services from your net sales, you will arrive at your gross income from operation. Now take note, we have learned, right, that there are items that are excluded from gross income, and we call them exclusions from gross income. And we also um, distinguished it from the usual allowable deductions, wherein when we say exclusions from gross income, we will exclude those items immediately. Therefore, we will not see them in the tax return. So if you notice here, you cannot see those items referred to as exclusions from gross income, and you already know them, right? So if you want to remember everything, you can visit your notes, or you can look at the National Internal Revenue Code. But when I speak of exclusions from gross income, I am referring to, for example, the proceeds from life insurance, right? So all those stuff. So you cannot see exclusions from gross income in the tax return. Why? Because they are automatically excluded. At the very first instance, you exclude them already. Okay, so you will not see them in the tax return. So you now have your gross income from operation. So you add other taxable income which are not subjected to final tax, and you will arrive at your total taxable income. So That's the first part, okay? Then we now proceed to the deductions. Okay, so we have allowable deductions, right? So in our previous meeting, I mentioned that you have two options for your allowable deductions. The first option is your itemized deductions. Okay, we call them itemized deductions. So for itemized deductions, you can remember our acronym, uh, Exentaloba Dep Dep Cheripen, right? So those are for itemized deductions. And you also have another option, and that is your optional standard deduction. So OSD. So you can see here or, right? So you have to choose whether you want to deduct itemized deductions or you want optional standard deduction instead. So for itemized deductions, you need to itemize, right? From the term itself, itemized deductions, you have to list all these deductions. Okay, so for this part, okay, in item number 34, this is already the aggregate or the total allowable itemized deductions. So the list or the items for deductions are actually disclosed in part 6, which I will scroll down later. Okay, and then for optional standard deduction, that's 40% of item 33. And what is item 33? That is your total taxable income. So whatever amount you have placed in item 33, multiply that to 40% and you will get your optional standard deduction. Again, you only have to choose one. Either you choose itemized deductions or you choose optional standard deduction. Once you made a choice, you are not allowed to change your choice in that taxable year, within that taxable year. So in the next taxable year, you can choose again. But once you have chosen for this year, for this taxable year, you are not allowed to change your choice. Okay, so let's look at these itemized deductions. So, diba, I've mentioned exentaloba, dep cherepin. So, part 6. Okay, let's move on now to part 6. Scrolling down. So, for these other items, we will discuss this in a later session. Okay, so this is now part 6. You can see here the allowable itemized deductions. So we can see here amortizations, bad debts, charitable and other contributions, depletion, depreciation, entertainment, amusement, and recreation, fringe benefits, interest, losses, pension trusts, rental, research and development, salaries, wages, and allowances. You have the government contributions, right, for SSS, GSIS, PhilHealth, HDMF, aka Pag-ibig contributions. And then we have taxes and licenses. Then we have transportation and travel. And in item 17, we have other deductions which are normally subject to withholding tax. And these are your janitorial and messengerial services, professional fees, security services. Now, you might ask, Miss, you mentioned that itemized deductions is just exentaloba dip charipen, right? So exentaloba dip charipen. Expenses, interest, taxes, losses, bad debts, depreciation, depletion, charitable contributions, charipen, right? So RAE for research and development, and then PEN for pension trusts. Now here, those other items that are not mentioned in your exentaloba dip charipen, those are under expenses. So exintaloba. So the first one is expenses. So for example, amortizations, these are part of your expenses in exentaloba, okay? And then fringe benefits as well, rental expenses. We have salaries and wages, allowances. Those are still under your X for expenses. And these government contributions as well, expenses, transportation, travel, janitorial, professional fees, and security services. Those are under your expenses, okay, under your exentaloba dip charipen. So the first one, expenses. Okay, it's just that this disclosure includes more details. Okay, instead of just using one simple line item expenses, we break it down further into the particular expense. Okay, so these are your itemized deductions. Okay, so the total here, okay, will be forwarded to part 4. Okay, part 4, item 34. So if we go back here, that's item 34. Right? So I hope that's clear. Okay, we were now able to translate our learnings on gross income, exclusions from gross income, allowable deductions. Then for allowable deductions, we have itemized deductions and optional standard deduction. Again, you cannot see your exclusions from gross income in the tax return because in the very first instance, okay, um, we will already exclude them. Okay, exclude them automatically. We will not disclose them in the tax return. What we can only see here are those items of gross income and your allowable deductions. All right, so don't be threatened or overwhelmed with the other items because we will discuss this. We will look at this again when we reach that particular topic for discussion.